There's a new group of more niche players that I think are beginning to give Amazon a run for the mindshare money. I want you to think about Etsy, Lululemon, Pinterest, remember we spent some time out there with them, and Stitch Fix, which I'm getting to know. So tonight we're going off the charts with the help of Tim Collins. He's a brilliant technician. He's my colleague at realmoney.com. Get a better read on these 4 names because you're going to hear more and more about them over time because I think they're going to just get bigger and bigger. Let's take them one by one. Let's start with the daily chart of Etsy. That's the online marketplace for all sorts of handcrafted goods. I believe in this Brooklyn-based company because when Amazon went after them with their own handicraft platform, well, guess what? Amazon failed. Etsy didn't skip a beat. As a matter of fact, it got stronger. The stock exploded higher today, up nearly $3, as the company rolled out free shipping for orders above $35. But what about the chart? Okay, Collins points out that Etsy's been stuck in a rut for the past 4 months. You can see that, right? Kind of doing nothing. The thing is, there's a good reason for that. Stock's up more than 40% for the year, thanks to a monster move in the month of February. Collins thinks that Etsy's been trading sideways to digest those gains. And a stock that's been 4 months consolidating, you've got to think about this consolidation as a coiled spring, which is how you get the kind of magnificent rally we had today on really very little news. Now, even after the stock caught fire this morning, Etsy's still stuck in the same pattern. It's called an ascending triangle formation. The floor of support at around 61, that's the hypotenuse. The ceiling of resistance at 70 is the base. We've already seen several tests of both the floor and the ceiling, and at the moment, Etsy's right smack in the middle after that big almost $3 run. You know I hate to chase stocks that have run, but when you zoom in on this chart, Collins really likes what he sees, especially in the full stochastic oscillator down at the bottom, all right? That's an important momentum indicator that tells you when a stock is overbought or oversold. When it comes to Etsy, the stochastics just made what we call a bullish crossover, and that's where the black line goes above the red one, and that is a very bullish signal that we have learned time and again been a great way to try to predict moves. According to Collins, the last few times this happened, the stock had already rallied about 10% going into the crossover. This time, Etsy's rallied like around 5% going into the cross. That's why I think the stock has more upside, although it might take a couple of tries before it can break out above the ceiling at 70. On the other hand, he believes that if Etsy breaks down below 61, he's wrong. It's time to walk away. I think this is a great stock. I'm sure there are people out there who say, wait a second, Jim, Head and Shoulders. I don't care about Head and Shoulders. I care about earnings, and I care about growth. This one's got it. The next retailer is carving a space for itself in a world dominated by Amazon. Check out one we talked about the other night, Lululemon. Now, what can I say about Lulu? They just get it. The stores are well-designed, they're teaming with shoppers, and the online business is booming. And that's how Lulu delivered 14% same-store sales growth when it reported roughly a month ago. Remember, again, that's the metric big money managers use. And when you get double-digit growth, people sit up and take notice. As far as Collins is concerned, Lulu has one of the strongest charts in the group. The stock's currently testing the ceiling of resistance in a rising wedge pattern. You can see there's that rising wedge pattern. And Collins thinks it breaks out. Although once that happens, Lulu has another ceiling at 190, okay, where it peaked when the stock exploded higher last month. I think he thinks it can be taken out. Basically, Lulu's been digesting these gains. That's exactly what we saw with Etsy. Kind of just sitting there before the coiled spring, which is what we want to see. Meanwhile, the full stochastic just gave us that bullish crossover that we're looking for. We saw that last time. Collins points out that this has consistently been a winner for the stock. And when it wins, it tends to win really big. Lulu is at 186. Collins thinks it can pole vault over $200. However, if Lulu pulls back below its floor of support at around 175 to 180, he thinks maybe you should throw in the towel, as this chart could quickly morph into a bearish Head and Shoulders pattern. Remember, I showed you that for Etsy.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.